Hello, everyone. Good morning, good afternoon, depending from where are you connecting. Thank you all for joining us today. My name is Ignacio. I am Director and Head of Alternative Finance at PCMI. It's a pleasure to welcome you to this webinar in which we will be speaking deeply about how blockchain and stablecoins are already reshaping cross-border payments in Latin America. I'd like to introduce Gabriele, the Head of Revenue and Sales at Bitso Business. Hi, Gabriele. How are you doing?
Hi, Ignacio. Good morning, good afternoon to everyone. A pleasure to be here. And we are delighted to pass the next hour or so with you to go through this report that we put together and hopefully giving you some good information about what is happening in Latin America.
Absolutely. Before starting, Gabriele, could you share some context about this research and explain why Bitso Business decided to invest in this report?
Yeah, absolutely. It's a pleasure. Well, for many years, I think Latin America has been seen as the last frontier in payments, in traditional payments as well as innovative payments. So the situation has been changing, under our eyes, and the reason is there is a massive amount of innovation happening in the region, which combined with the need of connecting our region to new payment infrastructure, new opportunities to move money efficiently and fast and in a secure manner, is creating interest from other places that have connections to Latin America to understand how the infrastructure evolving, what are the new frontiers and the new payment rails for payments in and out of Latin America. And so we decided that it was about the time to help customers, prospects, and whoever is interested in understanding a bit of the region. Mm-hmm. What are the new opportunities and why really blockchain and stablecoins are bringing those opportunities into a concrete real utility for all the companies and the customers that are dealing with payments in Latin America. So in a nutshell, it is to provide you insights, to provide you with a bit of knowledge, and to create and stimulate the curiosity in how this region has been evolving lately as far as blockchain and stablecoins matter. So that was our intent. I hope you will find this one useful and interesting.
That's awesome. Great stuff. So before we begin, and we will speak a lot about blockchain, stablecoins, and cross-border payments, let me share how this webinar will work. So the idea, guys, here is to keep the things conversational. We encourage you to submit all your questions in the QA box that you will find at the bottom of your Zoom screen. We'll do our best to address them during the presentation, but no worries, we'll have a 15-minute Q&A session at the end. All right, so let's dive into today's exciting topic. Next slide, please. As Gabriele was mentioning, over the past month, we have conducted an extensive research on this topic using mainly two methodologies. The first one was, of course, capturing and understanding and reading all the desk research possible in terms of the pain points of the traditional financial system when we use them for moving the money internationally. But apart from that, we conducted 16 in-depth interviews, 10 of those that were with money remittances and PSPs, and another 6 with experts in terms of regulation and regulation around Latin America. So over the next few minutes, we will walk you through our main findings in 4 things. First of all, we'll start explaining how the international money movement works today. Of course, I know that you are all experts and you understand these topics, but that's fundamental and essential in order to jump into blockchain and stablecoins. We'll go through the global trends shaping the landscape. We will enter into the specific inefficiencies and pain points that the industry in the region have tell you that they're still suffering, and then we'll do this bridge into blockchain and stablecoins and show you how this is already changing. In our report we present a lot of real life use cases. You will find a lot of information of how the main brands globally and in the region they are using this technology, but we will also show you how it works. All right. So again, please make questions, send them to the chat, and we will have a Q&A section at the end of this presentation. And we'll also stop and answer those questions if in the meanwhile that you are sending them. So if we jump to the next slide, let me start by exploring the current ecosystem of cross-border payments. All right. I want to give you some data points to understand the size of the opportunity. First of all, the global market of cross-border payment is huge, huge. And if we take where we work, which is pretty much consumer and B2B segment, that amount nowadays are $44 trillion, $44 trillion. But what the industry experts expect this to grow to is to $65 trillion. So there are more than $20 trillion opportunity ahead of money that will be moving through traditional rails that we can capture in a more efficient way. Think about this in terms of how much of that money that's the industries or the players pay every now and then that they move the money, in fees, in opportunity cost as well, and in added value for your customers. If we go to Latin America, the B2B cross-border market is around $60 billion and is expected to grow to the double by 2030, $1.3 billion. All right. Inside of this market, we have remittances. We know that remittances market is huge in Latin America, but it's not only huge in terms of volumes, but mainly in terms of the impact that it has in our communities, in our economy, mainly in Mexico and in the Caribbean. All right, but not only there, Colombia, Brazil, they are also growing very fast. So that market in our region is a market of $156 billion. But just to give you some idea about this number, that's 156 billion, more than double in the last decade, in the last 10 years. And it is now 20 times larger than 30 years ago. Latin America is the fastest growing remittances region globally. Think about this. We have 17% of the global remittances market and just the 5% of the world population, all right? So the opportunity is huge. And when we start to think and analyze how does the money move globally, we should go into the traditional correspondent banking model that, again, I'm sure that you all know about the SWIFT network. This is the mainstream system that has been around the 70s. And in the last year, it has been it has shrunk in recent years due to rising cost, lack of transparency, and other inefficiencies that we will go through, all right? How does it work? We have multiple correspondent banks that are involved in a single transaction, increasing the complexity, the cost, and the delays, because if we, depending on the corridor, the correspondent network can be longer or shorter. Maybe we can have 2 banks or we can have 5 banks, all right? And each step adds delays and adds fees. The fees are high. They're ranging from 3%, or in some cases, in remittances, we're speaking about 6%. All right. And of course, lack of transparency. We don't know when the money will reach to the payee, and when and what's going on in the middle. All right. So you should say, okay, well, yes, this is very basic, and we know that there are trends that are challenging this. So if we jump to the next slide, oh, sorry, I was one slide ahead, guys. Sorry, I was speaking about this slide, and I absolutely forget to show you the following one. So this is a corresponding banking. If we jump to the next one, I was watching my own PPT. Apologize about that. So these are other nowadays kind of traditional or other approaches that are trying to display the common correspondent model and that are trying to solve this payment. right? You know the single platform model. This is basically a wallet that has accounts in both countries, and they do a closed loop model that's good, that improves the experience, but it needs a lot of pre-funding cost. We'll speak about this when we reach the liquidity cost, right? Those companies that want to hack the traditional corresponding model and having banks and platforms in all the different countries, they have to have money sleeping in those countries, waiting for those movements. The interlinking model is something very interesting. I'm sure that you have heard about in our region about PIX and Colombia mainly, and how they are trying to connect, you know, those RTPs. And this is something that is going. I live in Australia, so I'm full Asia Pacific trends. That's something very, very advanced over there. But currently, not even a handful of local payment networks are linked. But it is not cost efficient, to be honest. It cannot scale to the 194 countries in the world. It won't scale. Probably, maybe, we don't know if they use new other technology, we'll see, but that will be slow. And of course, we should mention the card networks model here, right? Visa Direct, MasterCard Send, Union Pay, they're all doing the same, trying to use their own networks to move the money. But of course, this has a limited acceptance because we know that not all the people have a card with them, and it is expensive. It is expensive. So if we jump to the following slide, please. There we go. After speaking with the industry, after reading all about which are the pain points, which are the inefficiencies, which are the problems, we know that these are, okay, they are very costly, not transparent, they are slow, and blah, blah, but what are the pain points that the companies suffer, and how those pain points became costly for them, which is the opportunity cost of solving those pain points. So we summarize this problem, and we will see how blockchain is the most efficient solution for B2B cross-border payments in terms of solving these pain points. We summarize these pain points in 6. First of all, I would like to speak about the liquidity issue, because that's something, again, when I'm speaking about B2B, some of you are in the B2B2C market, all right? Some of you might be on the B2C only market, but this apply for all of them, or for your backend. And if this apply for your backend, they are charging you because of this. So the pre-funding requirement, this is pretty much tie up capital in multiple countries, what delays the transaction and increase the processing cost. If you haven't heard about the nostro vostro pre-funding account, every now and then I hear that it's like dinosaurs, you know, but the nostro vostro pre-funding accounts globally, they locks up over $10 trillion in dormant capital. That's money that is there, doing nothing but waiting for a transaction. It's not generating revenue, it's not being invested, it's not being used for anything else. All right. In Latin America, our research showed that money can be high as $2.5 billion, right? Over there, dormant, absolutely dormant capital. So this is a very huge topic. Of course, I will give the word to Gabriele a little bit to explain a little bit how they are solving this. But there is another one, which is the effects. The effects challenge is not only a matter, I mean, yes, it impacts in cost, of course, because a company can provide, you know, we spoke with huge companies that say, no, we are so huge, that we have this bank that give us this preference effect. So that's not a problem to me. Not yet, that's a problem to you. That's a problem to you. Because when your competitive landscape ate your share, you won't have that red tape, you know, that VIP service. So it's not only a matter of the cost of the effects, but also, of course, of the delays. Because if you want to move money, not using the mainstream currencies, thinking the traditional corresponding model that we were showing to you, and that will delay a lot the process. So it's cost, and cost is money, and it's direct cost in terms of effects. The third trending topic here is the local currency payings and payouts. And this is something that all the companies we have spoke about. I know everything we have read for doing this, more than 60 pages white paper report that you will receive and that you can download. You have the link in the chat, so you can start, you can keep that Google Chrome window open for you. Everyone say, okay, yes, all right, there is the backend, there is the way that we move the money, but there is the way that we connect, our institution, the last financial institution in the country, with the people. And that's another issue, because as you know, pretty much all the economies, they have their local payments, payouts, not only methods, but they are developing their own RTPs, SPEI, CODI in Mexico, PIX in Brazil, T3.0 in Argentina, and so far and so on. So we need a partner in all these countries, and we must pay for that partner. And sometimes we need more than partner. So we should to have one in each country, and that rise our internal cost. So this is very, 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 very important topic. And at the end of the day, this generate this security and transparency that we were speaking about, multiple intermediaries, they create this lack of transparency, but they also increase the risks. We spoke with company that said, we have these cases in which the transfer just stopped because a red flag in the intermediary number 4 on something, and we have to come back, and that's how we're speaking about weeks and a lot of money in losses, and of course a lot of engagement lost with our clients. The regulation is a topic we will speak about this, but we have a whole chapter, a framework that we develop, a qualitative framework about the regulation in Latin America. But at the end of the day, each country has their own regulation, and the companies that are in the B2B or B2B2C cross-border payment, they need to have someone that is that understand that language and that connect the point, the dots, between them. And last but not least, the legacy systems, because I didn't say this, sorry about that, but this is another huge number that you should have in your mind. 70% of all this global money movement goes through banks. If we add fintechs, or any digital financial institution that has a better UX and blah, 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 we jump into the 95%. But the most of those fintechs, they are using as a backend the banks, and they are suffering because of the legacy systems that these institutions have. They speak different language that rise cost in terms of system. So partnering with a company that has innovating APIs and that makes that easier is also something that impact in the cost. So here I know, Gabriele, I mean, you live solving this kind of pain point. So I would like to ask you if you have any real world case or story about this, or if you want to add something about this pain point that I have recently described.
Yeah, sure. I think just to add a bit more color and with feet on the ground in the region of some of these, massive pain points. The first one is liquidity. For context, one thing is to keep capital allocated in nostro vostro accounts in dollars around the planet. That's one story. But when you operate in what is called the global south, and our region is part of the global south, of course, you don't have to hold the capital in dollars. You need to hold it in local fiat currency. So that comes with a significant issue, which is first, how you get balances in local currencies. You must have an account and an entity to open your own account for doing business in that country. Then you need to reach and achieve their liquidity and leave it on the account, which brings risks, because not only you need to have a local account, you need to have local liquidity, and that local liquidity is stuck and you cannot use it. So a link to this one, therefore, there is the second problem, which is the effects. So one thing is to have a capital allocated in a nostro vostro in dollars, but if you have it in Argentinian pesos, in Colombian COP, or in Mexican pesos, although it has been more stable lately, you still run the risk of the FX fluctuation. So you not only need to allocate the capital, you cannot reuse it for your own business. You also need to protect your business for the fluctuation of that fiat denominated account in market from the FX going up and down like crazy. If you have ever touched or worked or dealt with Argentina, you know exactly what I mean. Inflation, it is triple digit, and nobody leaves, 1 pesos in a dominated ARS account in Argentina longer than what you actually need. And where you need to bring it, it is to more stable currencies, any other currency maybe your business is dealing with. So these two are massive issues in any company that is operating in our region. So they need to acquire multiple currencies because the economies don't operate in dollars. Most of our economies don't allow the foreign companies and domestic companies to have a dollar-denominated domestic account. There you have it. So these two risks to combine together are very significant. Last but not least, if you are in payment and you deal with our region, you also understand very well that what really matters is the last mile, the so-called the last mile, which is how and where you can place payments for collection and disbursement in the existing fast time or real-time payment networks. So you may be an aggregator, you may be a PSP, you may be even a domestic entity that does business domestically. However, you need the last mile in order to be able to collect from your customers or disburse payment to the end beneficiary. Otherwise, you're really dependent on another third party with all the SLAs and everything else, plus you're dependent on the SLAs and infrastructure of the actual real-time payment in market. So as you see, and you as probably lived, adding blocks to your chain and your value chain of the payment from the start journey till the delivery of the payments to the end beneficiary in markets like Latin America markets could be really cumbersome, and the SLAs and the point of failures are just piling up one after the other. So if you want to create efficient infrastructure in the market, the first three are massive headaches, and a combination of the three, or all of the three, plus everything else that everybody deals with, it is what you're actually looking for when you're looking for partners.
And let me tell you that this is something that is not, I mean, we did, the first step at any research is to read all the desk research that is, these are not topics that has been like put in the stage when we speak about these kind of things. Everyone speaks about the cost, the transparency, and the delays, but at behind of this, the liquidity cost, the FX problems, and the payments payouts. And the payments payout, specifically, I want to double click in this. With the boom of the RTPs, of the real-time payments infrastructure in the world, is been something massive, because some countries need the licenses in order to connect there. So it's not just let's have the traditional, payments or payout method. And I would like to jump to the following slide and ask you, Gabriele, because you're here, the voice of the blockchain crypto world. We know that this, and of course that's the idea of this analysis, that here is where blockchain and stable coins, present a concrete added value to this payment. But I would like to let you tell us a little bit about why, and let me add a question, why this is promising, not just in terms of theoretical, solutions, but also looking into the past, and we have here in terms of the speed of this market growth, and when or how do you believe this can start to replace more and more? It is already replacing these flows, but how and when do you believe this will start to replace more and more the traditional?
Absolutely. So I think we all need to reflect a bit on the journey and how much this is really a revolution that is happening beneath our eyes. So stablecoins, infancy stablecoins, are only 10 years old. They started to be used no more than literally 10 years ago. So everything in payments comes with time and effort and connections and new rates and everything. In just 10 years since the really early days of stablecoins, for example, Bitso Business has been able to capture 10% of the existing remittance flow between dollars, US dollars, and Mexican pesos with stable coins raised underneath. So if you think this, that is already a clear example that out of the 160 billion pie that Ignacio was mentioning at the beginning, 10% is already moving through alternative, modern, new raise developed with blockchain and stablecoins. That's impressive, and impressive especially because that one is the most competitive corridor for remittances on the planet. It's not between the Americas, it's on the planet. To give you an idea, in that corridor, 2-3 basis points of margin can make a difference from one player decided to give you the volume or bring it to someone else. 2-3 basis points, not 20, 30, not 200, 300. 2 or 3 basis points can make the difference in where someone is going with the flow or using another provider. So that is a sign that the industry, the payments and the cross-border payments industry, is ripe for innovation. And is ripe for innovation where these pain points that we mentioned in the previous slide are most acute. And the example of Mexico, it is clear in the sense, with all these billions of dollars moving, can you only imagine how many billions of dollars are trapped in accounts in Mexico, in Mexican pesos, just for making sure that your company that is moving money between US and Mexico has the money rightly available for disbursement once they reach, the account in Mexico. To do that one in T0, so 0 time settlement, and instantly, you must today, through the traditional banking, have it a balance in your account in Mexican pesos. So what we have demonstrated is that there is an alternative way, which doesn't mean this is taking over and completely replacing correspondent banking, but it is a clear example that there is an alternative way depending on use cases and places and currencies. So that is to say that the growth has been spectacular for stablecoin usage, especially in the last 4 years, but we are barely scratching the surface. And why? Well, I can give you a couple of reasons that are linked to the previous 6 pain points. One is clearly legislation and regulation. We are actively working, collaborating, and pushing for more and more clarity in legislation. Why? Because in the past decade, probably everything and anything that could have been said bad about crypto and stable coins and blockchain probably has been said. And we have seen many, many scandals of gigantic nature. So no denial of that one. However, this applies also to traditional finance. So every now and then you hear about fines being really imposed on traditional banks for not respecting rules in some jurisdiction, in some type of payments, in some type of flow movement. So for us, transparency and really crafting a legislation that is favoring the innovation and the transparency and the safety of alternative payments rails like stable coins and through blockchain is fundamental. So the education component requires us to explain to our potential customers and partners why this works, why this one is following the book of the legislation, why this one is really regulated domestically in the market where there is operation, and therefore it is a viable alternative. So the next 10 years are the 10 years where this will become, 10, 20, 50x of what we've seen already. And in these 10 very early years, this has proven the case for many use cases. I mentioned remittances. Clearly, the other one you can have in mind is FX and Forex. We live in a region, again, that has, in many markets, high volatility. So for people that professionally do FX and Forex, clearly they need a way also to find access to dollar FX and to trading without necessarily going through the traditional banks that have maybe capital restrictions. Where do they find liquidity? Where do they find opportunity to trade with the dollars that are the newest digital version of dollars with, of course, with stablecoins. So these two cases have been the early adopters of what has happened in our region. There are many more happening, and they're happening in the payments aggregation space. They're happening even in import-export company that, although they are large, they are not at, really enterprise size or corporate size to have access to cash pooling globally with global banks, and they suffer. And so they need alternative ways to move money across borders. And I think this is the way that they can do it efficiently. So that would be my sort of assessment of where we stand at the moment.
It's amazing, Gabriele. It's amazing. We're receiving great questions about regulation specific. These are so great, and we will speak about. We will finish with some insight about the regulatory landscape and what the industry said to us when we ask these questions. So I will keep them over there. And thank you for the friends of the local that they also promote their solution for this here. But what I mean, we're evaluating this insights with the industry, and someone told us, well, all right, but if I see the volume, it is nothing in contrast of the volumes that is being processing globally. And what we want you guys to when you read the report, what we want you guys to feel is the growth rate of this, as Gabriele was saying, right? This is not that much matter of volumes. Yes, of course, the matter of the forecast volume, that's very important, because that's the size of the opportunity that can go through one rail or through another one. And if you choose whatever you choose, you can make more money or less money. But looking backwards and forecasting into the future is the speed of growth, is this 56%. And again, this 56% with huge scandals, with only a few companies entering into this, and with regulatory uncertainty in the most of the countries. So even if we think linear, and we don't think this will grow linearly, this will be probably exponentially, but even if you think linearly, this is massive, and this is going very, very fast. In fact, if we can go to the next slide, please, we just wanted to give you, a snapshot of huge companies that are using this for this reason, that are using blockchain and stablecoins for these reasons, particularly. All right, you will say, well, yeah, but we have been hearing that BlackRock, and that has been, well, yes, but this is a 10 years industry, a little bit more than 10 years industry. And the major players are here, right? Visa, who became the first major payments network to settle transactions using stablecoins. WorldPay, right? They processed over 1.3 billion in stablecoins until September of this year, a couple of months behind. That's 30% increase from the one that they did in 2023. The City Token Services, that was launched as a cross-border liquidity platform using private blockchain technology, also complementing this broader transaction banking solution that the city is using. I'm absolutely sure that you have heard about the Reshape, Morgan, Onyx platform, right? We have numbers of that platform. They processed over 1 trillion in transactions by May, with an average of 2 billion daily. That's huge. That's huge, right? And if we look to another regions, we can see Ant International also collaborating with a giant Grab. I've been traveling around Asia during this year using Grab a lot. I mean, that's the company that KO, that won Uber. It's huge. Everyone used that. So they have launched this stablecoin platform. Stripe, as you know, that acquired a Bridge in India, or PayPal, which is doing this massive effort of integrating stablecoins into Zoom. So blockchain and stablecoin are not longer just an emerging technologies. We know that they are becoming integral to the evolution of the global payments, offering solutions that are faster, cheaper, and more transparent. If we go to the next slide, please. And thank you for the questions that we are receiving. Yeah, of course. This is great stuff, and we'll probably use this for the final Q&A. We spoke with the industry, mainly in Colombia, Brazil, Mexico, and Argentina. Those were our target markets, all right? But we also spoke with regional leaders that work in Chile, in the Caribbean as well, with the members that are in charge of the compliance and regulatory compliance in each country. And what the industry said is of course what you also have shown in your questions. So there is regulatory uncertainty. We pretty much validated that blockchain has this immense potential to reduce cost, to improve transaction times, but regulatory clarity is still a major hurdle. Some of the industry leaders that we have spoke with, they have been very concrete. We need clear, consistent framework, because if not, we will not go forward, right? And it's this regulatory ambiguity which is shaping the way that the companies are adapting and implementing blockchain solutions across the region. We have these 4 countries, the 4 countries that I have mentioned, Mexico, Colombia, Brazil, and Argentina. They are in the top 20 of globally adoption of crypto assets in general, all right? All of those. So they are at the forefront in terms of demand of the people. But when you speak with a company that might pay to a supplier overseas and they must deal with the bank, or when you speak with the bank, what they say, hey, this is not illegal, but it's not very clear in my country, so I won't move. All right, I won't move. What you will find in the report, we were discussing if bringing this here or not, but you will see, of course, not only a chapter of each country regulatory framework, but also a qualitative analysis of which are the countries that are more prepared. Because when we speak about regulation, it's not something like, okay, there is a bill about crypto in my country. It is about licensing requirements. It is about know your customer. It is about consumer protection. It is about taxation. And of course, it is about currency controls. Think in Argentina, of course, currency controls. So you might have everything, all the other things more or less clear, but 1 or 2 of those not that clear. So we will also provide you with a map, kind of heat map of how the countries are behaving over there, right? But I would like to, and after this we'll jump into the Q&A, but I would like to give you the word finally, Gabriele, to explain us how these high adoption rates in digital assets not only demonstrate that there is an openness to blockchain and stablecoin, but also how are you guys at Bitso Business giving that certainty to the industry, not only the technological solution for all the pain points, but also that certainty. Because our final conclusion is that you need a partner. You need a partner for this. If you want to do more, bigger, and better business than you are doing, stop losing money or the opportunity cost of that money. You will need a partner that solves all those pain points. And this is a huge point. So I would like to jump to the next slide and give you the word again, Gabriel, to explain your business model.
Yeah, I think that, and I hear this comment all the time when I go to events, I talk to prospects and even existing customers, legal uncertainty and the framework under which this business operates. That's true. That's why this is evolving, and it will continue to evolve. Just to give you couple of examples, Argentina very recently, for example, launched a registry for virtual assets. So in Europe, in very few days, we start entering to force MiCA, which is marketing crypto assets in digital assets, which is basically the legislation that the first time European Union is developing a framework for allowing within the 27 markets a common ground legislation and certainty for operators to deal with the stable coins. Clearly, there is another race going on the world right now. Most of the stable coins are dollar-denominated stable coins. And Europe is also very keen in not missing the boat, in being part of that global development and global opportunities. These are signs that we have passed the experiment. So I hear the doubts, I hear the uncertainty. I would say, A, you need to look at, okay, who is my partner, which has feet on the ground, knows the domestic legislation, follow the local legislation, and therefore it is a company that it is a legitimate company that can help me on the relationship in any country where I operate. That's the fundamental first milestone, I would say. Linked to that one, of course, there is the next one, which is, okay, does my partner have connection to the local real-time payments or fast payment rails? This is fundamental because, as I said before, you must have certainty of the SLA and the quality of your ability to deliver and collect payments in markets with someone that is a direct participant and understands the complexity of these systems. Every single domestic system has been built over decades, is full of uniqueness, is full of, cumbersome requirements and detail. And so you need to have someone that is really local and it is locally regulated to help you navigate that one. So that when you're dealing with your customer, because we're in B2B, you can offer and guarantee certainty of the payments rather than knowing what happened. Because otherwise we get back to correspondent banking, where after 2 jumps, you don't know where your payment is, what is happening to your payment. Last but not least, of course, you want someone that can help you navigating the complexity of dealing with stable coins if you're new to it, and has the ability to find you the liquidity for the flows that you have at your disposal. It means, operating with market makers, liquidity provider, and having the book where these trades can really find a match for bid and ask, so that whatever is your need for any kind of payments can be fulfilled and can be instant. So in an essence, I think these are the components of the new alternative cross-border payments that can be done and has been demonstrated that can be done through stable coins and blockchain. We are very excited. For us, this is a marathon, like everything in payments. But the exciting part, this is a proven business model that is scaling and finding more and more opportunity to develop new use cases beyond the traditional one where it all started. So import-export, global payrolls, and really companies that struggle to move money and are beyond the corporate size. These are the audience that wants to understand more, wants certainty, and need a partner that can really walk the talk with them and accompany them in this journey. We think we have this business model. We are very excited to continue explaining it, continue pushing for more clarity on regulation and legislation, and hopefully we will be able to support more customer and more people in understanding and walking this journey together with us.
That's great. That's great stuff. And let me ask you and take some of the questions here, Gabriele. What do you think in countries like where the stablecoins are not already regulated, or if they are prohibited, how can your product work over there?
So you need to divide the problem in chunks and to see, okay, first of all, can you collect in local currency? You have a local entity, you have local bank accounts, yes or no? From that account, you have other, regional entities that is connected to your entity, which is domestic. So can you do money movement between your 2 entities? How you do it today? You go through the dollars and other banks that provide you dollars, or you don't have access to dollars. So it's not to avoid the questions, but the question is not one size fits all. Really depends on which market are you operating. Some markets are absolutely stringent in FX. For example, in Brazil, you must do your FX through a fully bank-regulated entity. And after you reach the FX, then from that moment on, you can move that currency that you acquired in any other jurisdiction. That's one clear example. The other example is Argentina. There are limits of some activities that cannot be operating outside of the banking system, like import-export. They must operate through traditional banking. So there are limitations, but there are also many use cases and many businesses that can operate despite 100% clarity in the market, because this is not fully understood or fully regulated well in markets. And this allows us and many other players to continue evolving with the regulators, writing this new business model in the way that is allowing innovation rather than prevent innovation. So my answer in 2 seconds would be, talk to us, reach out. We know exactly what is permissible, what is possible, to which level in markets, in details, and I can tell you what can be done, what cannot be done, rather than giving you a generic answer everywhere.
That's amazing. That's amazing. Let me answer one of the questions that is here. And again, we have a couple of minutes more to answer your questions. And also, you can download the report. You have the link in the chat bottom in your Zoom. But one of our attendees is asking about the Mexican case, what's going on with SPEI and TF. Well, and I would like to answer and then give it to you, Gabriele, in terms of how does the alliances related with RTPs play a key role for anyone that wants really to take the efficiencies in their B2B cross-border money movement to the last mile, as you said. I don't want to enter into details. I would highly recommend you guys, if you're interested in the Mexican case of SPEI, Cody, now Novi, 1 week and a half ago, Nubank, and I don't remember the name of the university, but also with the Brazilian embassy in Mexico, they published this amazing report of Mexico and their RTPs. So the case in Mexico is that they are struggling, in contrast to other cases. Since SPEI was over there, they didn't push all the banks to adopt it mandatory, as in the Brazilian case. So that's why we see now that that after that they launched Cody, and now they are, with Novi trying to do what they couldn't do, which is 60% of the population has to use digital payments. So it's absolutely out of the average of the most part of the region, taking or removing Central America. In terms of why does they use SPEI and not TF, we can discuss this later. You can send us an email, and I will be really, really glad to open this conversation. But I would like to use, Alberto, this question of you and jump again to you, to Gabriele, and speak a little bit about the importance and the relevance of having these licenses that let you connect to the payouts, and mainly to the RTPs in both countries.
Yeah, let me give you quickly, really, the example of why Mexico. So Bitso in Mexico is an IF, which is as close as you can get to be comparable to traditional banks without being a bank. So by having the IF license, you are allowed as principal member to be connected to SPEI. This just very few months and not many years from now was a monopoly service. So you had to go through one partner, and through that partner, you were able to place and collect place payments or collect payments in Mexico through bank's account. So Bitso is part of a direct participant of SPEI. As such, we can place payments to any bank account that is connected to SPEI in Mexico instantly, like any other bank in the market. That's what I mean when I say you need to have the right partner license and able to connect to the real-time payment. So by virtue of that one, we are capable of sending payments and collect any time of the day, 24/7, by any bank account virtually that exists in Mexico. So that is a unique service which not only can open opportunities to really rethink domestic players, whether or not they have alternatives rather than just one provider in the market, they also can think about not only they have a partner for the domestic payments use cases, they have a partner that can help them to use the same speed and quality abroad by connecting domestically, doing the conversions through stablecoins, and then delivering to another fiat currency, dollars or others in the region, through another off-ramp on the other side. That's the example.
That's awesome. That's awesome. Great stuff. We have 3 questions here that are all related again to you, Gabriele. Sorry, it's not that I don't want to answer them, but they are asking first, if can Bitso Business serve you in all the main countries of Latin America? You will also find that on the report. But then there are 2 very interesting about your business, about the economics behind this. You know, how do you compete in terms of fees in the model that you charge? If you can just develop, I understand that this will depend, you know, in each country, but if you can give us some, at least in a glance, an explanation of how is that this model is cheaper than the traditional system. Sorry. Before that, we explained that, all right? We explained how the main companies, when they compete in price, it's because they have this huge volume, and the financial institutions that they work with, they give to them special effects, they give to them. But these are just a couple of those companies. And again, that's not an answer that you are being efficient. That's an answer that you are just delaying the problems to the future, you know, to the future of your company. But so, Gabriel, how countries and the economics behind Bitso Business? And thank you.
Yeah.
Please keep on sending a question. We'll answer them for the following minutes as well.
So countries, this business model works in 4 countries at the moment in Latin America. So Mexico, Colombia, Argentina, and Brazil. Plus we have on and off ramps in the United States. So we can collect payments or we can disburse payment in dollars. We are starting experimenting by these early days. It is something we will have for 2025 around SEPA payments and SWIFT payments. Clearly the experience is not a T0 like when we control the on and off ramp on both sides of the payment, but it is consistent, it is competitive. So if our customers beyond on and off ramps, when we have it directly, want to have a broader global reach, we are working to also solve for that problem. So markets, 4 markets, the main market in Latin America, plus USD ramps. In terms of pricing and competitive, there are 2 components you need to think. Actually, I would say 3. There is domestic cost, which is really payment cost per transaction. There is conversion cost. How much does it cost to you today to move from one fiat to another fiat, passing through the dollar in the middle very often. And the last one is, okay, how competitive this FX can be in our books versus the spot rate you can find in Bloomberg or in any official, you know, system you are looking at to see what's the FX between dollars and whatever currencies. Okay, the 3 components. Domestically, we are competitive, we are close, but we think we are competitive to incumbent providers that today offer you pay in, pay out. Clearly, our pricing is always matching a volume that your business does. So it is a tier-based pricing. The bigger you are, the cheaper becomes per transaction, this cost of pay in, pay out. That's the first part. It varies, of course, depending also of what's the cost on the domestic system. There are fixed costs for us to be connected to real-time payments that we also absorb. Therefore, the size, the bigger the size, the smaller can be the unit cost on that pay in, pay out. Second part, which is the cost on the FX. Well, in the industry, you have seen very likely a range of, you know, probably and being very cheap between 200 and 600 basis points markup on the FX if you're dealing with the traditional FX provider. Being a large bank, small banks, that's a wide range, but that's very much the range you find today through your providers. If you're based in Latin America, more often than not, you need to move to dollars, and therefore a global US-based bank, and then moving the funds to another Latin American countries or globally. Well, that FX, you don't have it upfront. And if you look and you do your math, you know, post-transaction, you will see that my comment is not far off from your reality. Well, the fees that you see from us it's literally a fraction of those fees, and they are extremely competitive because we have, you know, an infrastructure which is not as heavy as they have, and we are local. So we don't ask you necessarily to move to your funds to a physical account somewhere else. You can do the conversion to the stablecoin and then do into the FX. Finally, the FX, the pure FX versus spot rate, depends on markets. The dollars, even the digital dollars in some markets where we operate in Latin America, still comes at a premium because it is so hard to get even physical dollars in the market that even in our books, there is a premium. That being said, versus spot, I mean. So that being said, you may find a opportunity where we are more competitive than spot, which happens very often, for example, in Argentina, and other places, for example, like Colombia, where our volumes and floats are struggling sometimes to compete at parity with spot. But if you do the calculation of all-in fees, you can do your own math that despite this, you will be very, very competitive versus traditional banking. If you add on top a T0 settlement and no pre-funding, well, you can do your own business case, I guess.
That's awesome. Not one, not two, not three, but 4 questions about your price and business competitiveness. So it's great stuff that you guys are already asking that. That means that you are interested in this solution. Let me answer this question, Gabriel, because I don't want to compromise any private firm here with recommendation. But you're asking. One of you is asking if you recommend to open a personal account to receive and to send money from your company to and from LatAm, or if it is better to open a corporate account, guys. We won't do any kind of recommendation here. We know and we have spoken with a lot of law firms. You will see their opinions, and we know and we understand that mainly the SMEs owner, they are doing that because they don't find a product that let them do this in a transparent and in a formal way, because that's being informal. So the corporate account is the legal one, all right? So this webinar is recommending the corporate account because that's the legal one. When you read the section of regulation, you will see all these 6 categories that I was speaking about, not only taxation, but also licenses and so far and so on.
No, only we do full KYB. We do full KYC, KYB. We have a thorough and stringent process before opening accounts to any company. We ask information by directors. So this is a similar experience of the one you have had when you open your bank accounts. So even in that sense, you will realize pretty soon this is a really thorough, legitimate business that we really care about and we control, you know, to the stringent possible level to make sure that we know the flows and the money and the operators that are going through the rails.
We're pretty much running out of time. Let's jump to the next slide. And the last question is interesting, Gabriel, because this is to you. How long before Bitso can operate in the Caribbean? Is it in your roadmap? What are the next steps that people expect and waiting for you over there?
We are continuously evolving the roadmap. We think that with those markets, we continue to do an improvement of our value proposition this fall where we are, but we understand that there is way more comments happening. You mentioned Caribbean is one, the other one big is Central America in our map. So there is a map of opportunities we're putting on for 2025. We are very agile in creating new ramps. So if anyone has interesting use cases and opportunity, please reach out, depending also on where our customers are raising a hand or shouting the loudest. Our roadmap is not written in stone, and we're absolutely keen to expand broadly in Latin America beyond where we are already.
Awesome. Great stuff. We're in the last minute, guys. Apologize, we have more questions here. Please get in touch with us, get in touch with Bitso Business. You can write them on their web page, and you can send the questions that you still have, and they will be very open to be in contact in name of PCMI. Of course, if you have any kind of doubts in terms of the analysis of the report, you will find our contact as well in the report, and we will be delighted to keep this conversation open and going. Do not forget to download the report. You can scan the QR code, and you can also download it in the link that you are receiving, and you have received several times during this webinar in the chat window. From me, the last thing to say is thank you so much to all of you for investing this time in learning about this opportunity that is Bitso Business offering to the sector, and to you, Gabriele, and all the Bitso Business for this magnificent webinar that you have coordinated. I don't know if you want to give the last words, and we are all set.
Thank you all. It's been a pleasure. Hopefully you heard something that is really interesting and really capture your attention. If that's the case, feel free to reach out. We're here to help, to explain more, to guide you through this one. It's a very exciting times for new alternative payment rails through stablecoins and blockchain in Latin America. Thank you for your time.
Thank you, everyone. See you next time. Bye-bye.
Thank you.